Hey everyone, welcome back to Corporate Decoder, where we try to make sense of what companies really mean rather than what they say. You know, like deciphering corporate riddles. Today we are diving deep into Vanguard Whitehall funds. Think of it as a sneak peek into where your money might be going if you are investing in one of the many Vanguard funds. It covers several funds, but don't worry, we'll focus on the most interesting bits. If you like getting the unvarnished truth from companies, don't forget to subscribe for more content like this, and also join our Discord in the description below. Alright, let's jump in. This is a semi-annual report, so it covers the first 6 months of Vanguard Whitehall Fund's fiscal year from November to April. It is like getting a report card on where the funds are and where they are heading. It is more than just a list of numbers. First up, we have the Vanguard Mid-Cap Growth Fund. This fund focuses on companies that are in the sweet spot of growth. To simplify, these are not the huge corporations like Apple, but companies that are growing but still have quite an opportunity. Okay, so first let's look at costs. The costs are measured out of each $10,000 investment in the investor shares VMGRX. The cost totaled $16, that is about 0.322%. This 0.32 figure is annualized, basically meaning that it is what you would expect the full year cost to be. That might seem small, but it adds up and is also important to compare when looking at other fund options. Now, where is that money actually going? Well, information technology leads the way, taking up about 31.2% of the fund, and industries at about 18.2%. Health comes in as the next biggest sector, taking up about 13.7%. And what about the total holdings in this fund? Well, it's not too shabby. Fund net assets are at $2.07 bulk 114 holdings. The portfolio turnover rate is at 40%. In plain speak, this means that the fund has been replaced or turned over. Almost half its holdings. Not very little, but not that much either. Next on the menu, Vanguard Selected Value Fund. This, instead of seeking simply growth, this hunts for stocks that seem undervalued, bargain buys if you may. So what is the cost for this fund? The cost of the shares in this fund is about $17, which calculates to about 0.36% annualized cost. So where do these funds land? Biggest portion is in financials at 23.3%, with industries taking up 18.7%. So the two biggest segments are financials and industries. This is very different form. The last findings we evaluated when information technology was taking on the great majority. What is the total picture on the funds? Well, net assets totaled $5,961,000. The number of holdings here were noted one holdings than the other fund. The portfolio turnover rate is 100 and investor fund. The portfolio turnover rate is 13% on the other hand, really low. This means less changing over time. Now we have the Vanguard Emerging Markets Government Bond Index Fund. As the name suggests, this one invests in, wait for it, government bonds from emerging markets, aka debt from nations which are still developing. For the ETF shares, costs ringed up about $9 or 0.18% annualized. That is pretty low if you compare with the other two finds we previously talked about. Let's break down the asset allocations. It is very different than one would expect in stocks. Here, Asia takes around 42.4%. That makes sense. North America, despite being in the name, taking up around 17.1%. South America taking up 18.2%. And Europe taking up around 17.1%. South America taking up 18.2%. And Europe taking up around 12.9%. Africa takes up the least at 7.6 though. For these bonds, net assets totaled $5,197,000 with 784 holdings. Huge number of holdings. This is a bond fund. Portfolio turnover rate is 12%. That is really low. We see that this fund has different share types. One are the ETF, exchange traded funds shares, so that's like stocks. Next we got Admiral shares, think of this as premium. Then institutional shares, that is for the big boys. We are not going to bore you with it, but basically the pattern remains the same, with institutional shares having the least cost $8 or 0.15%. Then ETF, then Admiral makes sense. Now, global minimum volatility, so pretty much the point here is to try to avoid risk, so no crazy big swings there. Sounds pretty reasonable. For investor shares, cost 11 or error or 0.21% makes sense. Now we know the routine. Again, not that strange. North America leads 61.5%, then Europe takes 18.8%, Asia about 14.4%. There's not a lot of volatility in Africa in the fund. Assets are at 2,135,085 holdings, almost double of the first find, but with similar valuation. Now, International Dividend Appreciation Index Fund. Do these pay juicy dividends? Find out. The ETF variant has very low cost, $6 or 12% to hold these funds. This time it is Europe at 44.6% and Asia at 36.4%. Basically, these are international numbers. It's good to be diversified. We get net assets of $8,175,000 across 366 holdings. This one is doing big. 10 or 0.19% for the ETF shares. Again, nothing out of the ordinary. Europe and Asia lead again. We see a common themes on these international funds. No big surprises. 10, 100, and 1,000 across 1,591 holdings. Huge amount. Lots of eggs in this basket. Makes sense as they are trying to minimize risk and exposure. Now, International Dividend Growth Fund. Let's get to it. This one has high cost, $27, compared to the other ETFs. That puts it at $0.54. Most prominent were Europe at 69.3% and also Asia at 17.6%. North America had very little in this fund, which might make sense due to the dividend growth focusing on Europe and Asia. A somewhat smaller fund we got with and $11,000 across only 40 holdings. There are sections in this document, but we are not going to dive into that really. We are here for performance and what is worth it. The legal mumbo-jumbo is for lawyers' edge. So that's a look at Vanguard's recent filing. What can we take away from all these numbers? First, Vanguard is huge and diversified in so many areas. The International Dividend Growth Fund is kind of the outlier because it's so small in comparison, but still a good offering for those areas. For all the ETF funds, at least, they follow very basic allocations of more assets here, less assets there, very cookie cutter-ish. If you are looking at low cost, most of their funds are more or less the same, so nothing too important there. As for risk, with all the diversification, not much to worry about. Their turnover rate isn't even significant. Basically, what it means for the long run is that the company doesn't do much on these funds, but that's not a bad thing. It's like a good sleep, you don't notice it, but without it, everything goes wrong. Overall, Vanguard's filings reflect a steady, if not particularly earth-shattering approach to investment management. What's your take on all this? Let me know your thoughts in the comments. If you found this breakdown invaluable, hit that like button and subscribe for more in-depth analyses. Also, join our Discord channel in the description. Thanks for watching, and I'll catch you in the next one.